everyone. Hi, everyone. My name is Scott.
Good morning and welcome to the Leaders in Mining Conference hosted by Six. I'm Stephen Soock. I'm a gold and silver equity research analyst at Stifel GMP based out of Toronto. As you head into a day filled with opportunities in the mining sector, I wanted to provide some thoughts on recent trends in the gold industry and perspective on evaluating value creation in the junior side of this business. Consolidation among the senior gold producers has been really an ongoing theme over the last few years. We've seen major consolidation that started essentially with the Barrick Randgold merger in 2018. It was quickly followed by the creation of the Nevada Gold Mines JV in 2019. Not 2 years later, the market then saw Agnico Eagle and Kirkland Lake merge as equals, which was a major step up in both their production profiles. More recently, we've seen the acquisition of Yamana by Pan American Agnico announced. Just last week, Goldfields and Anglo proposed a major JV to merge Tarkwa and Iduapriem in Ghana, and Newmont-Newcrest merger could be a reality in the next little while here. So what does this kind of set the stage for? Despite an expanding consolidated annual production profile among these companies, they've chronically underspent on generative exploration. This is been pretty consistent over the past 10 or 15 years and means they're caught a little flat-footed when it comes to opportunities to backfill this production profile. So with that in mind, they'll really have to look towards M&A in order to maintain their production base into the future as mature assets roll off. So this newly minted group of what I like to call super major gold producers means that the threshold for smaller companies to be in play has moved up significantly. We used to talk about production of 100,000 ounces per year to be a target to kind of be in play as an acquisition or be on the radar of these big guys. That's now become more like 150 to 200,000 ounces per year. So this means two things. One, consolidation at the smaller end of the space, and two, bigger targets for these exploration companies. So for junior companies looking at an acquisition as an exit strategy eventually, the size of the acquisition really has to be worth the time of the larger company. To accomplish this, I think it'll be necessary to have some consolidation at the junior side of the gold mining space, creating companies that have potential to hit that 150,000 ounce per year minimum threshold to start to gain the attention of the big boys. This is also something our buy-side institutional clients have mentioned they find very attractive. They're looking at consolidation as a way to provide better capital efficiency at the G&A level within the corporate entity. So I'd say the potential for value creation from this angle is especially apparent in Nevada. We seem to have a lot of junior companies in fairly close proximity. So in addition to gaining scale, there's also the rare opportunity for permitting knowledge to be gained from one project and then applied to another, or for actual eventual operational synergies once these assets are in production. So the second thing I mentioned was bigger targets. Consolidation is great and a major step in the right direction, but it still likely means a collection of smaller individual assets to get to that, call it 150,000 ounces per year. The most attractive type of asset for large gold producers to backfill their long-term production profile is one of scale. So this provides operating and management efficiency, as well as providing a step up in that production profile over a long period of time. Often demonstrating this scale means lower grade, but with a large amount of tonnage defined from an open pit perspective. Kind of conversely, it can also mean high grade with less tonnage, but higher grade systems are often steeply plunging, making it hard to test the full scale potential of the deposit from surface and get that really snapshot point in time picture that really shows that deep, large scale. Of course, the unicorn asset is high grade, large scale, bulk tonnage deposit, near surface, near infrastructure, and in a safe jurisdiction. That's what everyone would love to have to work with. The reality is that undeveloped assets that check all of those boxes don't really exist anymore. So with reality in mind, the question becomes which one or two of these do you focus on to make the most value for shareholders? Do you hunt for a large tonnage deposit in Africa where political risk will always be present or perceived to be present? Or do you hunt in the Golden Triangle where infrastructure is scarce? Do you look for smaller scale, high grade deposits with the goal of expanding them to reach a meaningful scale through additional discoveries near mine or expansions at depth? Unfortunately, I'm not going to give you the answer. It really is, it depends. At different times in the market cycle, different combinations of these factors are rewarded differently. In a gold bull market, assets with bulk scale and high torque, as we refer to it, lead the pack as they benefit from larger margin expansion on a percentage basis from a rising gold price. When metal prices suffer, cost inputs uptick. Companies with higher grade assets tend to lead the pack, as the negative impact from these margin compression factors is diluted by the denominator effect of having a very high value in situ rock. Personally, I've been focusing on infrastructure and higher grade over the last little while. The theme over the last few years has really been one of inflation, with investors focused on the cost line especially. Proximity to infrastructure for undeveloped assets helps limit the impact of inflation on initial capex by allowing for a smaller scope of mine build. Essentially, fewer cost lines and critical path items that are at risk of blowing up due to externalities beyond the control of the company themselves. The higher grade portion of this focus kicks in once these assets are in operation. While companies express their operating costs in dollars per ounce, the real input is the fully loaded cost to get a ton of in situ ore out of the ground and processed. It's really this metric that's exposed to inflationary pressures and then divided by the number of ounces in that ton of rock. So if you're dividing the inflation cost increase over a large amount of ounces, the impact on the dollar per ounce margin is minimal, essentially what I refer to as the denominator effect. To some degree, you can scale this thinking also to a corporate level. A mine with larger production will have its corporate overhead spread over more ounces than a smaller mine with smaller scale production, but essentially a not as elastic overhead cost base. So that's a lot to digest, so I'll leave it there for now. There are 1,000 factors and different angles to help explore value creation in the gold mining space and through an exploration trajectory. But I hope what I've touched on today provides some helpful high-level framework on how to approach investment in the mining industry. Enjoy the rest of the day and the rest of the conference.
Hello, my name is Mike DeRose. I'm the President and CEO of Lavras Gold Corporation. The title of our presentation is Exploring to Realize the Potential of a Multi-Million Ounce Gold District in Southern Brazil. Please read the fine print for forward-looking statements. Lavras is a relatively new company. We went public in April of 2022, almost a year ago now. We are led by a team of exploration professionals in mining with mining experience, as well as capital markets acumen. We have a tight capital structure and cash to finance our short-term goals. We have a very large consolidated land package with a pipeline of 23 known gold targets in southern Brazil in an area of excellent infrastructure. And in the last 11 months or so, we have announced 3 new gold discoveries on our property. We have a 2% royalty on the Mara Rosa project in central Brazil, which I'll talk about. And we also have 1 million ounces of 43-101 compliant gold resources on our exploration property in southern Brazil, the LDS project. In terms of our capital structure, we currently have 41.1 million shares outstanding, about 2.3 million options. Our cash position as of the end of last year, December 31st, 2022, was 4.8 million Canadian. We have a good mix of shareholders anchored by Eric Sprott at 16.6%, management and insiders at 24%, and a mix of retail and institutional investors. In terms of our valuation, given we're an exploration company, one way to look at our valuation is called enterprise value per ounce of gold in the ground. And basically, enterprise value is market capitalization plus debt minus the cash position. When you go through the math, basically we're trading at about $4 an ounce in the ground. That compares with an industry average of about $25 to $30 an ounce. So we feel our company is relatively undervalued relative to averages, and that this is a good time to take an investment in the company because essentially you're getting our exploration upside plus our royalty for free. In terms of this slide, I show discovery cost per ounce. Historically, we have spent about $14 million Canadian or 11 million US to define the million ounces that we currently have as gold inventory. That means our discovery costs are about $11 an ounce. This is a very good cost given that the industry average is about $30 an ounce. And in Latin America, the average cost to discover gold is about $132 an ounce. So what this essentially means is that for every dollar we're spending looking for gold, we're actually converting that into ounces. In terms of our royalty, the slide on the left shows a map of the Mara Rosa project. Our predecessor company, Amarillo Gold, was purchased by Hochschilds in March of 2022. The reason that they purchased Amarillo was to develop a 1 million ounce open pit gold mine called the Posse Gold Project, which is shown on the left. And it's important to understand that we have a royalty position, not on the Posse Gold Project itself, but on all of the exploration ground surrounding that Posse pit. And as I mentioned earlier, this Posse mine is slated to go into production in the first half of 2024, so about a year from now. What's important to realize is that we made a discovery, we being the predecessor company Amarillo Gold, made a discovery called Pestino, which is located about 3 kilometers to the northeast of the Posse pit. We defined a gold-bearing structure that measured about 1.7 kilometers in strike length and dipped to the northwest at about 60 degrees or so. We put about 40 holes into this thing before we turned the project over to Hochschild to build the mine. You know, our royalty does cover that discovery at Pristino. In my opinion, it's probably 300,000 to 500,000 ounces of gold. At some point, in my view, Pristino will become a source of mill feed for the Posse project, and in this way, it would create value for the 2% revenue-based royalty that we have on the exploration ground. It's also important to recognize that our exploration royalty covers a total of about 65,000 hectares in the entire district. Now to the fun stuff. We're now moving to our exploration project in southern Brazil. We call it our Lavras do Sol project, or LDS project. In terms of where we're located, you can see where Rio de Janeiro is on the map on the left. And if you go south of there to the port city of Porto Alegre, it's about a 1.5 hour flight. Porto Alegre is about a population of about 1.5 million people, major port city. You drive by tarmac roads for 4.5 hours to the southwest to our project, Lavras do Sol. You can see that the area of Lavras is blessed with great infrastructure, roads, power, water, and so on, and that we're not in the jungles of northern Brazil. We're actually in an area of sort of rolling land, grassland, and cattle farming. So LDS is a very large and complex mineral system. And in terms of physical size, it's potentially on par with other world-class deposits. In this slide, what I show is the physical dimensions of mineralized structures for some world-class deposits, such as Porgera, which is 26 million ounces. You can see on the slide on the left, or on the diagram on the left, that the area of gold veining is something like 3 to 4 kilometers. Olympic Dam in the middle, 90 million ounces, that's BHP. Basically, the area where you find mineralized rock is in the area of 4 to 5 kilometers in dimension. And then we have Cripple Creek, which is Newmont mining. The area where you find gold structures is in the area of 5 to 6 kilometers in length, in diameter. On the right-hand side, you can see our LDS project in southern Brazil. We have known gold and copper occurrences throughout our property that spans an area of something like 10 to 11 kilometers. In terms of geology, this is a slide just gives you a snapshot of what's going on. If you look straight down, imagine you're in a helicopter looking down on the left-hand panel, you see that circular feature. That circular feature is what we call the Lavras do Sol intrusive complex. It's essentially the remnants of an old magma chamber of a volcano. The Portuguese arrived in Lavras in the late 1700s and started working surface showings. So we've identified at least 23 known gold showings scattered throughout the intrusive complex and into the green rocks on the right-hand side, which are the overlying volcanic rocks. Zooming in more detail, we've identified sort of 6 priority mineral deposits that we're focusing on. Those are shown in the right-hand side of the screen. Buchia and Cerrito are our most advanced targets, which give us our 1 million ounces. And Zekasuza, Matilji, and Matilji Extension are the 3 new deposits that we announced as new discoveries last year. And Candelaria was a deposit that was discovered in 2007, 2008 by a predecessor company. The slide on the left-hand side here, or the diagram on the left-hand side, shows our claim blocks. We have something like 22,000 hectares of ground of contiguous claims, and covering all of the favorable geology. And again, just reiterating that Buchia, our Buchia deposit is about 500,000 ounces. That's the southwest portion of the project. To the northeast, we have our Cerrito deposit, which is another 500,000 ounces. Zekasuza on the left-hand side was our first discovery, followed by Matilji and Matilji Extension, and then Candelaria, again, found in 2007. So you can see that there's a lot going on our property. And in fact, we have 2 drill rigs on site right now in the middle of a 16,000 meter drilling program. And we probably drilled about 6,000 or 7,000 meters so far. And we should continue to be drilling these priority targets with a lot of good news flow in the near future. In terms of the geological model, essentially what we're looking for are what we call intersecting structures. So you can see these 2 sort of dark blue regions, these what we call magnetic lows. Where they come together, we tend to find these concentrations of gold, and certainly that's the case at Zekasuza. We tested 14 holes at Zekasuza last year, and all holes intersected gold mineralization. The best hole, I think, was 3 meters of 28 grams per ton gold, about 100 meters below surface. So we're following up on that, that discovery as we speak, and hopefully we should have some good results in the near future. If we zoom out a little bit, you can see where Zekasuza is on the left-hand side relative to our Candelaria discovery. Again, that was discovered in 2007, 2008. And you can see that Candelaria is about 1 kilometer away to the east, southeast of Zekasuza. It's associated with that beautiful blue magnetic low structure that we see in the magnetic data. And it's noteworthy that the best hole that we drilled at Candelaria, which is a gold structure over probably about 1 kilometer now in strike length, was of 36.1 meters of 1.42 grams per ton gold. And that was about 70.4 meters down the drill core. So it's probably about 50 meters below surface. So we're hoping to follow up on these very compelling results to see whether or not Candelaria, in fact, joins up with Zekasuza. Now moving to the south, we announced 2 new discoveries recently, one called Matilji, which is that large blob sort of in the center of the slide, and then Matilji Extension, which is about 650 meters or so to the north east of the Matilji discovery. What's important to note is, again, we're drilling off these targets that are intersecting structures. You can see a beautiful northwest trending structure and then an east-west structure where we find Matilji and a similar sort of geological setting at Matilji Extension. What's important to note is that we found these targets really by following up on a very large golden soil anomaly, which is shown here in the greens and the yellows and the gold colors in this slide. Basically, we have a very large gold anomaly that measures something like 3.5 kilometers in an east-west direction and about 2 to 2.5 kilometers in a north-south direction. So we were really looking for the source of the gold, and we've started to find it both at Matilji and Matilji Extension. We are currently drilling at both of these targets and hope to have results out during this year. What does the rocks look like? This is an example of what the rocks look like at Matilji. You can see on the left-hand slide in our first hole, you have what we call silicified rock with sericite and disseminated pyrite. It's the pyrite that's hosting the gold. In this case, we had this is an intercept of 1 meter grading 3.7 grams per ton gold. We also find what we call bonanza gold grades, very high gold grades associated with visible gold that pops out of the solutions or the mineralization. In this case, in the middle slide in hole number 2, we had an intercept of 31 grams per ton gold over 0.6 meters, associated with this Lamprofere dike. And then in the slide on the right, sorry, on the diagram on the right-hand side, the photo on the right-hand side, we show rocks at depth where we actually show 4 different mineralized events. We can see what we call high temperature potassic alteration overprinted by lower temperature sericite alteration. we have these beautiful gray silicified zones, and then milky quartz. The milky quartz is actually hosting gold, visible gold, and in this case, we got 13 grams over 0.7 meters. Looking at Matilgia extension, the slide here in yellow shows a big copper anomaly. And why is that important? Well, it's important because at our Matilgia extension deposit, we actually started to find copper mineralization associated with gold. In fact, the best hole that we drilled was hole number 20, where we hit 10 meters, grading 13.21 grams per ton gold, 23 grams per ton silver, and 0.22% copper. And so we're following up on this very important discovery and hoping to find more of this high-grade style of mineralization. It's very different than what we saw at the Matilgia zone. Excuse me. And this slide really just shows some of the pictures of what the mineralization looks like. Essentially, on the left-hand side of the screen, we're looking at very altered rocks, hydrothermally altered rocks, with a lot of copper mineralization. And on the right-hand side of the screen, we're looking at relatively unaltered rock with just these little microfractures. And what's important to note is that going from the left-hand side, where we're at a depth of about 300 meters, to the right-hand side, where we're at a depth of about 92 meters, so call it 200 meters of vertical extent, we're seeing very high-grade gold mineralization. It seems to be more concentrated at depth and less concentrated as we get towards surface. But we can say that we have a healthy system here with at least 200 meters of vertical extent. So we are following up on this and trying to understand where the critical mass of higher grade mineralization may be, which would be a significant development for the project. So to sum up then, we can say that the geology at LDS is an intrusive hosted gold system. We think it's what we call alkaline affinity. The mineral system, in terms of its physical size and distribution, is certainly on par with world-class deposits that we see around the world. We currently have 1 million ounces of gold and 2 of 23 known gold deposits scattered throughout our property. And so we hope to build on that 1 million ounces. And we have made significant discoveries in the year that we've been a public company. We feel like the company and the stock is undervalued relative to what we have and what's going on in the company. We think this is a great opportunity for investors or potential investors to take a position. Thank you very much. And if you have any questions, please feel free to call us.
Hi, my name is David D'Onofrio. I'm the Chief Executive Officer of White Gold Corp. Very pleased to be here today to tell you a little bit about what I think is a really exceptional and unique gold exploration company. This is a company we co-founded with the Power One Capital Group, a Toronto-based merchant bank that's been involved with many high-profile, successful companies in the exploration sector, primarily in the Americas. And this is an opportunity. We partnered with Sean Ryan, the notorious prospector, about 5 years ago. And it's a company like not many others that I've seen in terms of opportunity. So a very exciting property. It's in a great place, and thrilled to tell you a little bit about it. The company assets are entirely based in Canada's Yukon. The Yukon is perennially ranked as one of the best places in the world to perform mining exploration. And, we've certainly had that experience. And, just to give you a little bit of background as to, what led to this company, I think that's a very important part of the story. It's incredibly interesting. So our company is based in the Klondike district. This is the area just south of Dawson and made infamous about 125 years ago when they had the Klondike gold rush. And, from that time until today, there's been over 20 million ounces of gold mined from the placer creeks. And remarkably, until about 15 years ago, there has been no modern day exploration. And, that's a real head scratcher for a lot of people. Why would that be the case? And, the answer today, sort of fast forward, is actually quite simple, is that this area of Canada was not actually glaciated. So most prospectors across Canada, their tool is outcrop. So they look for outcrop, they take samples, and based on the what's composing those outcrops, that's what they look for, nickel, gold, or whatever it is. Without outcrop, what do you look for? And Sean Ryan, he comes from a mining background in Timmins, and he had a theory. He said, I see, across the world, what leads to these gold deposits. There's so much gold at surface here. How can we crack the code to figure out what it is? How do we identify these gold in the bedrock? This, gold came from somewhere, didn't come from the sky. And he moved to the Yukon and spent, a good 10 years doing that. And what he honed in on was using soil geochemistry as the targeting method to find mineralized systems. And from there, he would refine his approach, using trenching, geoprobe, that type of stuff, to be able to identify drill targets, which he thought might be highly prospective for bedrock gold occurrences. And remarkably, within, after doing his analysis for those number of years, he was able to discover two major gold discoveries, multi-million ounce, high grade, both of which were acquired by majors. And what he was able also to do, which is really remarkable, and this is what led to the genesis of White Gold, is he was able to tie up this entire district. So when he came to us as a partner, basically what we created as White Gold was a true district scale land package with prolific gold history, almost no modern day exploration, and the little bit of modern day exploration that there has been remarkably successful, right? Exploration is a very hard business, but to have that kind of success that quickly, that's very exciting. And to be the group that ties up the entire district, in our view, was literally almost like a once in a lifetime type of an opportunity. And we were very quick to join Sean and put this company together and bring it to market. And I think as I talk about a little bit more detail here, you hopefully understand why this is such a special opportunity in the gold exploration sector. So here's a little bit of history again. We all know what happened. Incredible riches were discovered from surface by a lot of people until this day. They're still continuing to pull gold out of the creeks, and as more modern day explorations happen in other areas of districts, like to the south of us, there's been many discoveries that have happened. So just to the south of White Gold, there's the Western Copper and Gold, Big Gold Porphyry deposit. So there's probably been closer to 40 million ounces of gold in this district. And like I mentioned, really, we are the first people that are doing any real work there. And it's our team that's had all the success. We really believe we cracked the code, and we are at the very early days of exploring what we think has the opportunity to be a prolific gold camp, similar to what you find in the Abitibi or Timmins in Nevada. And for that to be owned entirely in one junior company, I think is a remarkable opportunity. And on the point of opportunity, this is a great summary here. So we talk about the district scale land package, and this is a true district scale land package. 350,000 plus hectares. We have a very experienced management team, the guys that have been there and had all the success in the region. What we've been able to do to date, and I'll get into some little more details, we've delineated and defined a very significant high-grade gold resource. It's north of 1.8 million ounces across all categories, 2+ grams, and growing. There's significant opportunity to grow these flagship deposits themselves. And at the same time, like I mentioned, we have this incredible land package with all these opportunities that we've defined over the years. Using the same approach that led to the success, we've refined it. I think we've cracked the code here, and now we have a number of these targets that are at the drill-ready stage. 2 of them, we've made major discoveries in the last couple of years, which I'll get into, and we think we're literally just scratching the surface. So with this type of an opportunity, what we've also been able to do is attract the interest of 2 major mining companies, being Agnico Eagle and Kinross. They share a view about the prospectivity of this district. And over the years, including the work we've done and the work that sort of some of the prior operators have done, what we now have is a company that's invested over $100 million into this. We've been able to track 2 major companies. We've defined these ounces. We've really beat the odds here. So I think in terms of a company that maybe some people are new to. The hardest part, the riskiest part, that's already been addressed. We've made the discoveries, we know what the district's like, and now, I think from a risk-reward perspective, the upside opportunity is quite compelling. So I'll just kind of move a little bit further along here. This is the timeline that I just spoke to. And at this sort of the same point in time, which is really kind of dovetailing nicely into today's day and age, is alongside of ourselves, the Yukon has really sort of come on the radar of other major mining companies. And what we're seeing today in the Yukon is, besides Agnico and Kinross, who are our partners, there's several other very high-profile mining companies that have now entered the Yukon, and particularly entered this district. So what I mentioned, there was Western Copper and Gold just to the south of us. On this map, all the yellow properties are white gold properties. You can see we basically own the majority of the district, and these are properties that are owned today after being worked on and picked through the entire district for 15 years. So we really own now more than 80% of the identified targets in the district. Into Western Copper and Gold, Rio Tinto made a very significant investment about a year ago. They're the second largest mining company. And just also contiguous to that and contiguous to our properties to the south, Newmont is advancing the coffee project. This was another project that Sean Ryan had discovered through another junior he was working with at the time called Aldebaran Resources. Gold Corp bought that for $500+ million, and now it's owned by Newmont after Newmont having acquired Gold Corp. So we have the largest gold company in the world in our backyard, contiguous to us, that have announced they're now in the permitting process for that mine. So that is a hugely important vote of confidence, I would think, for the district. These major mining companies do a lot of due diligence before they're willing to make those types of investments. So we're really happy to see that happening. What's also very exciting and transformational for us, as part of that mine development plan, there's going to be a road that will be built from Dawson at the north right down to the coffee project. That road literally cuts through the majority of our land package. So now we will be able to access almost our entire portfolio of properties by road, which one, makes exploration a lot easier, but two, it significantly changes the economics of any discoveries you find. Now, like any mining camp, Timmins or wherever else, you find 500,000 ounces, you can just truck it to one of the facilities in the district. So it's a real game changer for us. We're thrilled to see that that's sort of the plan moving forward. In addition to those great companies, Hecla also making major investments recently with their acquisition of Attack. They have properties in our district. B2 Gold just announced a strategic partnership with Snowline, which is off to the east a little bit. So, I think it's quite clear that this area is, really come on the radar of some of the most sophisticated people in the world. And I think we're really sitting in a wonderful position, owning so much land with so much prospectivity, in addition to what we've already, proven as a successful model. So I'll move forward here, quickly talk about a few of our key properties, what we've done in the past and what we have sort of on deck. I mentioned our flagship deposit. It's called the Golden Saddle Arc Resources. We also have another small deposit just to the north called the VG. All in all, it's north of 1,000,008 ounces, 2+ grams, open pittable. That is remarkable metrics by any stretch, and to be able to have that in one of the best mining jurisdictions in the world is phenomenal. In the last number of years, we've sort of taken a two-pronged approach. We've looked to grow that deposit as well as make new discoveries. Like this company's put together exploration. It's the blue sky new discovery opportunities that really gets us all excited, and we've been very successful in both. On the Golden Saddle particularly, instead of delineating the drilling, we know as a junior company we'll get the most bang for our buck by making new discoveries in a close proximity. We've identified a 5+ kilometer mineralized trend just 2 kilometers to the west. We've done some drilling on that. The most success we've had to date is on a target called the Ryan Surprise. It's one of about 6 or 8 targets on that trend. We've done a fair bit of drilling in the last 2 or 3 years, and we think that there's a significant amount of gold in there. And we are going to now update our mineral resource to include that, which will be announced later this year. So I think you're gonna really see we'll be in a class of very few people in terms of size and grade of a project like that. On the new blue sky opportunity front, we made a major new discovery 2 years ago on our Betty property. This is contiguous to Newmont's coffee deposit. It's right on the same fault system. Newmont is there. I also mentioned Western Copper. They're right in the district. This is elephant country. And on our very first diamond drill hole, after working it up with this protocol that Sean Ryan and his team has developed over the years, we drilled 3.5 grams over 50 meters from surface. So that's a world-class hole, and we were thrilled. We've gone back and done more work in this last season, and we've continued to hit broad intersections of very high-grade gold. Very excited for the prospects here. It's right in that same fault system. There's a number of other targets. We will definitely be spending more time drilling this. This is an exciting new discovery. It's gained a lot of attention, and we're very encouraged by what it is, especially because of where it is. Right, these large deposits are usually found in clusters, and having those two big guys right in our backyard, literally, that's drilled. And another target we have on deck here is our Nolan target. This is something that everyone's really been excited to drill for the last number of years. We've worked it up. This is a road accessible property not too far from Dawson. It sits on a major fault structure. It's a prolific gold camp. And you can see here there's a huge soil anomaly, gold soil anomaly sitting right on this structure. This has never been drilled. And for us, in 2023, to be able to drill a target like this is phenomenal. And there are many more of these within White Gold. And this is what gets me so excited about it. I think the value is shown by our having such great partners like we do. There's analysts that have given us ratings of over $2 a share, which I think they appreciate the opportunity. We're certainly trading, unfortunately, at a significant discount to that right now. But I think if we continue to execute, this is going to be re-rated in the market as we grow our gold deposits. They're de-risked. We've done the hardest part of work, and we have so much blue sky on these new properties. We have some big copper porphyry type targets right by the casino as well. So a lot going on, and our goal as a company is to make these discoveries, look to monetize them or bring them advanced in some capacity with the right partners, and use that capital to pay our shareholders and continue to invest in the exploration. So this is a very brief overview on this company. A lot going on. I encourage you to check out our website where we can get a lot more detail. And I really hope you appreciate the uniqueness and the value of this company. Again, in a great area to work. Tremendous amount of success historically. We beat the odds by developing a big asset that's continuing to grow, and a tremendous amount of blue sky potential with these exciting new discoveries, and hopefully more new discoveries to come. It's been great being here. Thank you all very much, and please follow us and stay tuned for more.
Hello and welcome to Six Mix. My name is Ali Haji, CEO and Director of Ion Energy Limited, a company I co-founded in 2017 to look for lithium in Mongolia. Typical legal disclaimer there. I'll touch on the team quite quickly here, but just to highlight some of the key members with respect to our mining experience as well as our social license in country. Matthew Wood is a serial mining entrepreneur, an individual that has had successes around the world. More recently, the sale of Avenco Minerals, I beg your pardon, to Oz Minerals in Brazil in March 2018 for about $440 million. He also had a very successful exit in Mongolia back in 2011-2012 when Hunu Coal was sold to Banpu for about $500 million in cash. So an individual that's highly accredited, in fact, a holder of the Order of the Polar Star, which is the highest honor the Mongolian government can bestow upon any foreign national. Wendy manages our relationships in China, and then, of course, half our board is Mongolian. We believe it's important to operate that way, irrespective of jurisdiction. In terms of our lithium experience, our advisory board and technical board consists of individuals that have built the likes of Lithium Americas, Neo Lithium, and ultimately sold those such organizations. Don Haynes, highly accredited with having written the very first 4311 for lithium, has been on site twice alongside myself. Dr. Hashbat runs our operations in terms of geophysics and hydrogeology in country. And then Dr. Mark King, who was the QP on file when Neo Lithium sold to Zijin, has been to site as well and helps oversee our exploration program. Last but not least, an honorary mention for Dr. David Deek. He was a CTO at Lithium Americas, and then he moved on to work at Tesla. where he helped build Gigafactory 1. So we started the company in 2017, recognizing that lithium would make a comeback, much like every mineral. And we tend to see cyclical natures in their demand. But of course, now we're in the midst of what we are seeing, or what we're calling a clean green energy transition. Mongolia today is highly untapped. In fact, the vast majority of the country, less than 1% has been issued for licenses. So there is a fair bit of potential there. We know based on its neighbors to the north and south that there are various geological trends that are showing significant value in terms of resource potential. We believe it to be untapped for battery metals today. The Mongolian economy is growing rapidly. Geopolitically, of course, it is situated whereby it will need to serve the large behemoth that is the Chinese market with respect to resources. And we've now seen a significant value proposition for Mongolia, whereby Rio Tinto, with the acquisition of Turquoise Hill shares, has doubled down on their investment in country, ultimately amounting to about an $8 billion investment into Mongolia. The Chinese have openly started to invest in Mongolia as well, which was historically not the case. Zijin, a major global conglomerate that is Chinese, has now invested in Xanadu Mining, a copper explorer in Mongolia. And then last but not least, very recently, Sinomine, an organization that has assets in Canada with Tanco out in Manitoba, as well as in Zimbabwe and the lithium front, have now invested for the first time in Mongolia for a JV with Lithium Century. Our advantage in Mongolia, we've been there about 12 years. We've had a fair bit of experience starting companies, exiting companies, as well as being one of the largest gold producers in the country today as part of the group. Ion Energy's focus is really to evaluate the potential for lithium, and in the following slides, I'll show you how we've done so, and really start to build on the economy in terms of bringing a finished product that will add value to the overall GDP of the company, or the country, I beg your pardon. Our flagship license is Babayul. It's 81,000 hectares in Sukhothai province, located 23 kilometers from the Chinese border. Some of the early work done there show a maximum grade of 811 ppm, an average grade of 426 ppm, and very low contaminant ratios, if you will. We know it resides in the Gobi, and as a result of that, we have high evaporation, low precipitation, very suited or very similar to what you would expect to see in Thacker Pass in Nevada. We did some work shortly after going public in August 2020 that helped identify grades as high as 1,502 ppm. And for those of you familiar with clays and evaporites, that's very much in line with what you want to see with respect to something that will show commercial viability. This asset remains rather early stage. We will spend a significant amount of time and money on this asset in the coming quarters, if not early next year, to better understand it and its significant scale. But I will add, as part of the battery metals revolution, copper and nickel, two metals that are very much required for this transition, were also found on this asset with grades of up to 1,252 ppm copper and 494 nickel. We're calling that discovery on this 60 kilometer by 20 kilometer tall license the Victory Discovery. In 2021, Ion Energy acquired Urgaknaran, which means rising sun fittingly, in Dorngovi province. This asset is 29,000 hectares in a fault-bound basin, very typical of what you'd expect to see in the lithium triangle. The team and I had our first site visit in April last year, where we had the ability to collect brine on surface, showing grades of up to 918 milligrams per liter. Rather compelling in terms of brine grades anywhere in the world, and we were rather excited by that, and thus moved on with a more detailed exploration program. That's our team on site, and some commentary there from Mark King, just highlighting what similarities he draws from what he saw at Urgaknaran as opposed to the Nevada playas as well as the South American salars. The photo there shows Mark, Don, myself, and Enktushin Kishiksurin, who runs our exploration in country as well. So the 918 was encouraging enough for us to begin a geophysics program, a TEM geophysics program. We concluded 8 lines, so 82 line kilometers across the entirety of the basin, and we found resistivities starting as low as about 0.2 ohm, which is, of course, very encouraging for those looking for a subsurface salar or aquifer. We then did a 9th line across the entire basin and found that at half an ohm cutoff, and the vast majority of the juniors, I should say, use 7 ohm as a cutoff. At half an ohm cutoff, we had 9.9 billion cubic meters of low resistivity beneath surface. At 6.5 ohm, we had 22.7 billion cubic meters below surface. So very exciting in terms of scale. And that then prompted us to commence drilling. So we went out in October, we started drilling our diamond holes, our lithological holes. We also did some water wells. So we managed to complete two and a half of our water wells last year, and about 3 of our lithological holes, of which results were shown to the market back in December, which we'll touch on in just a second. Some of the images you see here are with respect to the equipment on site, the work that has been done. And this slide, I think, should show the most value to those that are following the lithium industry in detail. Our lithological holes were drilled about 1.5 to 2.5 kilometers apart across that low resistivity basin that I've highlighted to you in the previous few slides. And the intercepts that we had seen here are about 100 meters average across 3 holes, with average grades at about 320 ppm lithium. And these intersects were all seen in gravelite zones, so either gravelite, tufaceous sand, and very high porosity regions, specifically what you would expect to see in Argentina, in for instance, Centenario. Why does that 320 ppm number need to resonate? Well, if you look at Albemarle Silver Peak Mine in Nevada, it is the only operating brine mine in North America today. And it's held, of course, by Albemarle, which is a global major. The average grade of their lithological drilling was 121 ppm. We're seeing numbers almost 3 times as high as that. And of course, this is extremely exciting stuff. Now, the water wells that we had drilled are 6-inch tricone bits with a 4-inch slotted pipe. They're gravel packed. And we resumed drilling about 10 days ago on the 3rd hole. We should expect to complete that hole in the coming days, if not maximum a week. And at which point we will be deploying our balers and our piezometers on site to start to pump out these water wells, obtain our baler samples for assaying, as well as understand the general chemistry and makeup of our brine samples for assay in order to move towards inferred resource. So this is an image of the water wells being set up on site. And of course, we are very thrilled that we're getting rather close to collecting those assay results. In terms of our cap table today, very tight cap table, 60.7 million shares outstanding. We have warrants at 11.5 million warrants at 70 cents that will expire in April 2024. In terms of options, every grant has always been issued at a price higher than the previous grant. Fully diluted, about 71 million shares at a market cap today at about 17.9 million Canadian, and in US about 14.3, given we do trade on the OTC under IONGF. In terms of ownership, management and insiders hold about 25% of the company. We escort ourselves longer than the necessary requirements from the TSX. In fact, we have never sold a single share. We continue to buy on market. And of course, we want to be alongside our shareholders for our successes. Mongolian investors that have physically invested capital hold about 9% of the company. Family offices between London, Zurich, and New York, around 7% of the company. Delbert Capital out of Vancouver, about 5%. They were the lead order on a bought deal that was completed by PI Financial and Stifel GMP back in 2021. Some of the other funds here that are, of course, global majors that I believe need to be highlighted: Palos, US Global, Ixios, Broma, Alpha North, and Maxit. Various funds around in and around the world hold in aggregate about 12% of the company as well. So we've had a very, very aggressive growth trajectory, given we didn't have access to country until 2021. In 2021, when we acquired, 2022. In 2021, when we did our bought deal, we acquired Urgak Naran. In 2022, we managed to get out to site and conclude or commence our exploration program on Urgak Naran with a brine discovery of 918 milligrams per liter. We've also done the hydrogeological or drilling water wells, as we've just mentioned in the previous slides. We've had some site visits with partners. We've commenced conversations with strategic investors. And I think that's important because that'll give us the validation necessary to recognize as first movers that we were correct in our assumption that Mongolia does in fact have world-class assets. The early resource indication, if you look at the numbers that were produced back in December, we're well on track to start to figure that out. We will have an inferred resource indication based on the assay results that we will be collecting in the next 4 weeks, and that inferred resource indication will be provided to market in Q2. In Q3, we start to work towards measured and indicated, which really allows us to get a better sense of our scale and ultimately have a pivot or a re-rate in terms of our equity. And then in Q3, Q4, we'll look to do a pre-feasibility or scoping study to better understand how Urgapnaran goes to production. Some numbers that might be worth considering for our viewers in terms of comparisons. If you look at our market cap today at about 17 million Canadian, and a price of 30 cents. We have some paid research here from Calor, FRC, Zach Small Cap, and Stonegate. And the numbers all are in the range of about $1 Canadian or about 50 cents US per share, based on the last update from Zach. And I think the image on the right should help paint a better picture in terms of valuation and why that proximity play that I continue to speak about is important. In Mongolia, being first movers, we're not Ioneer situated beside Sigma. We're not Wealth beside SQM. We're not any other sort of junior right beside a major that has proven out a basin. We're just getting started. And so our valuation today is about a sixth of anybody that has seen grades similar to ours in a stage that is similar to ours. When we do have that inferred resource calculation, we believe the company will re-rate quite significantly. So we remain at the bottom of the comp table across all our peers, and we are currently working with various institutions to launch bank coverage as opposed to paid coverage that we've looked at in those prior slides. So in terms of the summary of our investment, the inferred resource is imminent. We're of course located rather strategically and very close to the largest consumer on the planet. Lithium continues to rise in its demand. The margins, we believe Mongolia is the jurisdiction in which we can provide a production profile that will be industry beating in terms of the cost of production. And that, in a nutshell, is the Ion Energy story. So what you're seeing on screen now are my contact details. As always, feel free to get in touch directly if you would like to chat. And I thank you for your time and thank you for joining 6mix.
Okay, hello everyone. I'm John Black. I'm the CEO of Aldebaran Resources. Welcome to 6mix, and thank you to the 6 team for providing this format. We hope this is an opportunity for those of you that might be new to our story to learn about our company and the exciting project we have, the large copper project we have in Argentina. For those of you that are familiar with our story, it's a great chance to get a quick update of where we're at with the project. We are a company that's listed on the TSXV, so the appropriate disclaimers apply as indicated on the diagram. Let's just take a quick summary of why invest in Aldebaran, why take a look at Aldebaran. We're a company that already has a sizable copper gold resource in hand. We'll see that it's a large deposit right now. It, however, has potential to be significantly larger, and a lot of what we'll be talking about today is that exciting potential that we've already begun to unravel to see what the ultimate size of this project might be. We have multiple strategic investors that are supporting us moving forward. That's important not only for the technical endorsement of the project, but also providing financial support to move the project forward. We'll see that we're a management team that specializes in identifying these type of projects, large copper or copper gold deposits that can be drilled out and ideally sold to a major. And we have a track record of success. Our first company was called Antares Minerals, and we successfully drilled out a large porphyry system and monetized that to the benefit of all of our shareholders by selling that to a major mining company. We also have an ongoing exploration program. We have 3 rigs active at the moment. We're doing our best to see if we can increase that rig count in the near future. And more importantly for shareholders, we have a very compelling valuation. This story is just starting to get started. There are many, including in San Juan, where we're exploring in Argentina, there are many large copper stories that are quite exciting, but some of those have already been revealed to the public, and the market caps have adjusted accordingly. They're still great projects, but they've maybe made their runs. I think this is an ideal time to be taking a look at Aldebaran as an investment because there's quite a bit more value to be revealed in this project moving forward. So just quickly who we are. Aldebaran's actually the 3rd company under our same management team. We're a group of seasoned explorationists that specialize in identifying these projects that can be large copper deposits. And our strategy is to identify them, drill them out, de-risk them, and sell them to a major mining company. That's exactly what we did with Antares Minerals, our first company. We discovered the Akira project in southern Peru, drilled that out and sold it to First Quantum for $650 million. So we have executed our business plan successfully. We learned a lot in the process of doing that. From that, we spun out Regulus Resources, which is focusing on the very exciting Antiquary copper gold project in Peru, and Aldebaran Resources, which we'll talk about today, which is focusing on the Altar copper project, an equally exciting large copper project, huge copper project in the province of San Juan in Argentina. Just a quick look at our share structure. Our share structure is very tightly held. We have one large shareholder, Route One, a hedge fund out of San Francisco. They've been long-term backers of us as we move forward, and they provided the seed capital for us to acquire this option to earn into 80% of the Altar project. And correspondingly, they have a large percentage, over 43% of the company. We're earning into the project from Sibanye-Stillwater. They have a 17.5% equity interest in Aldebaran. And more recently, we announced that South32 has come in as a strategic partner. They made a very timely placement into us last year, which provided the funding for us to go forward. So a technical endorsement of the project, a fantastic strategic partner for us to have on that provides us with a lot of technical assistance and ideas moving forward on the project. As management, we have a significant position, and the remaining portion of the free float in the company is less than 25%. So fairly tightly held company, which has its pluses and minuses going forward. We can see the share structure on the right-hand side of the diagram. We currently have a market cap of approximately 130 million Canadian, which is healthy, but very low compared to the resource that we already have in hand, as we'll see. We have coverage from Paradigm Capital, and more recently, coverage has just been established by Desjardins with a target price of $1.65 on the company. We're currently trading in the 90-cent range. The project's located in west central Argentina in the province of San Juan. We can see on the diagram. San Juan is one of the more mining-friendly provinces in Argentina, and with the existence of large operating mines like Barrick's Veladero project or the Guacamayo gold mine, which was Yamana more recently sold to Minera. And these are large mines that have already been established, and they provide a lot of employment and benefits in the province, which means that mining is viewed as a very viable and attractive industry in the province. And the provincial government and the public are really clamoring for additional mines to be developed. This is one of the more mining-friendly areas that on the planet right now. And there are 5 large copper projects in the province right now that are actively being explored. In the north part of the province, right up against the border on the left side of the province of San Juan, we see the Jose Maria and Filo del Sol projects, 2 very exciting projects held by Lundin companies. And then down on the southwest corner of San Juan, we can see that our Altar project is one of 3 large copper projects being explored. 50 kilometers to the north of us is the Los Azules project of McEwen Copper, and 25 kilometers to the south of us is the Pachon project of Glencore, which is immediately adjacent to the operating Los Pelambres mine on the Chilean side of the border, held by Antofagasta, one of the larger copper mines in the world. So all 5 of these copper projects are already very large copper projects. I believe if they had been located 30 kilometers to the west in Chile, they would already be mines. And Argentina, and particularly the province of San Juan, realize the potential they have now to develop a very significant copper mining industry moving forward that would benefit the communities and quite frankly, the nation considerably at a time when it would be very valuable for that to happen. So very supportive area for us to work, a hotbed of activity. There are over 60 drill rigs active in the province right now, and there would be more if we could source more drill rigs. Everybody's scrambling to get as many rigs as possible. So a quick word on how we acquired the Altar project. The Altar project was one that really had been quite well known. It was previously drilled out by a company called Peregrine Metals, a junior operating very much with the same business model that we do. And they sold the project to Stillwater Mining for $487 million in 2011. However, the project never really fit with Stillwater. Stillwater was a platinum producer with an operating mine in Montana, and this was an early stage copper project. It didn't fit. The shareholders weren't too thrilled about moving it forward, and it became somewhat stranded in Stillwater. When Sibanye bought Stillwater, they determined that it didn't fit strategically within their group, and they marked it for disposal. And we were in a good position to strike an agreement to acquire the project. So we have the option to acquire up to an 80% interest in the project by making a $15 million payment, which has been made, awarding a 19.9% equity position to Sibanye Stillwater, with the rights to maintain that position as they move forward. And then we can earn a 60% interest in the project by spending $30 million on exploration. We are just crossing that boundary right now. So in the near future, you'll see that we announce that we've earned into 60% of the project. And we can earn up to an 80% interest by completing an additional 25 million. We'll have 3 years to do that, and that'll likely happen much sooner than that with it at the rate we're already exploring. So let's look quickly at the project itself. Like many porphyry districts, the project is actually a cluster of individual porphyry deposits. There are at least 5 centers of known mineralization and probably more as we continue to explore in the district. But the currently reported copper resource in the district is in the central and east deposits on the eastern, the right-hand side of this diagram. Note the scale bar. This district is over 7 kilometers east to west, with multiple porphyry centers within that district. This is a cross-section looking to the north, and we can see that mineralization at Altar Central and Altar East. The conceptual pit that constrains our reported resources outlined on this diagram, it's one pit that captures both zones of mineralization with a bit of a septum in between the two better defined zones on this diagram. And we can see that a large amount of the mineralization reported in the upper portion of this diagram is at the measured and indicated resource. When we signed the agreement to earn into this project, there were already over 100,000 meters of drilling completed on the project. So we're earning into a project that has a very substantial database on it already and a very large resource in hand. We can see that if we combine the measured and indicated resources, that's approximately 1.2 billion tons at approximately a 0.5% of copper equivalent grade, with the dominant mineralization value in mineralization being in copper, with lesser amounts of gold and some molybdenum associated with that. And then we have an additional nearly 200 million tons of inferred resources at a slightly lower grade. So very large deposit already. But as we began to explore this area, we realized it could be much larger. We've been doing quite a bit of drilling over in the QDM radio zone on the left-hand side of the diagram. The copper mineralization in this zone currently is not reported in a resource. It needs additional drilling. Very exciting results there, but somewhat deep. It'll probably turn into something that might be exploited by bulk underground mining. And as part of the process on this project, we have a philosophy of collecting systematic data over the entire project area. When we inherited this project, there was a lot of drilling done and it had been well executed and well preserved, but very little systematic data collection throughout the entire project. So we've completed geologic mapping of the entire area, surface geochemical data sets for the entire area. And most recently, late last year, we completed the first systematic, deep-looking 3D IP geophysical survey in the project, and it delivered a very surprising result for us that we'll see on the next diagram. On this diagram, we can see a cross-section through the drilling. We can see central on the left-hand side of the diagram and east on the right-hand side of the diagram, and the conceptual pit that constrains that resource. And then as pastel colors in the background, we can see a large red anomaly. This is a conductivity anomaly that resulted from this deep-looking survey. When we completed this survey, the only drilling we had was the shallow drilling in the upper portion of the diagram and the one deep hole on the left-hand side of the diagram. And what we noticed was that on all of our drilling, as we entered into the top of this anomaly, we were mineralized. And the one hole that cut all the way through the anomaly was quite mineralized. But we didn't have the two longer drill holes in the center and right-hand side of the diagram at that time. And we had a very large anomaly wide open. We were drilling the hole in the deep hole in the middle portion of the diagram as we received this data. And that hole returned over a kilometer, over 1,000 meters at a 0.4% copper equivalent grade. So very attractive hit right through the heart of that anomaly. And it indicated that an anomaly might be very closely mimicking distribution of mineralization. This got us very excited, and we embarked on our drilling program this year with expectations that we might be able to prove that much of this red anomaly or pink anomaly in this diagram could be mineralization. And the deep hole on the right-hand side of this diagram is hole 224. It's the first hole we announced in our first press release of this drilling campaign. This came out a couple weeks ago. And we hit nearly 1,200 meters of mineralization in this hole at about a 0.5% copper equivalent grade, with over 400 meters of 0.68 copper. So we've shown that this large anomaly is very closely proxying the distribution of mineralization in the deposit. And it's important to note that those 3 deep holes, the 2 holes on the right-hand side of the diagram, are over 500 meters apart, and it's over 700 meters to the deep hole on the left-hand side of the diagram. This is indicating we have a very large area of minerals, potential mineralization, a very high probability as we continue to drill this out, this will be mineralization. It will substantially increase the size of the deposit and dramatically change the geometry of this pit moving forward. So we're extremely excited. Stay tuned for a number of drill releases that will come out over the following months. We're currently drilling with 3 rigs. We've got a 4th rig that we hope will be here soon to help out, and maybe even an additional rig or 2 before we finish up the season. Our field season has been extended. Formerly was approximately 4 months that we could drill on this project. It wasn't due to conditions on the project itself. It was because we had to cross 2 high passes to get into the project. But last year, Glencore cut in a lower elevation road into their Pachon project. We share access via that road. It's extended our field season to about 8 or 9 months a year. So we'll be able to drill all the way to June. Keep in mind, we're in South America, so winter is sort of June to August. And then we'll be able to get back to work in September on the project. This is just a different view looking to the south of that large anomaly. We can see the density of drilling from the previous drilling near surface. And we can see the long holes that we're dropping into the project area. And so far, each of those long holes is coming back well mineralized. There's a very, very good chance we'll increase the size of this deposit as we'll go forward. Just a few quick words. We won't have time in this format to go through this, but our plan is to get as much drilling as we can done in the remainder of this year, be in a position to begin to show the full size of the deposit. It will probably take us 1 more year of hard drilling to get to the full extent of this and be in a position to put out a PEA as we move forward on the project. In addition to the drilling that's obvious for us to do right beneath the pit, there are still a number of regional exploration targets. We'd very much like to get forward to these projects, but they'll probably remain as blue sky potential for us in the future once we establish the value of the obvious mineralization we have in hand. We've already talked a little bit about how Argentina is a hotbed for investment right now. This is due to Argentina realizing the potential for mining to become a major industry in some of the provinces, and even at a national level, they're beginning to realize that. And they're starting to change their policies to make it more attractive for foreign investment into the company for resource development, not just mining. This actually holds for oil and gas exploration in the southern part of the country as well. And more notably, we're seeing the major miners like Rio Tinto, BHP, South 32 begin to move into the country, which is an endorsement that we're moving in the right direction and it's becoming a more attractive place for major mining investments. This is in conjunction with a noticeable movement of major miners beginning to acquire copper assets. I think this is the leading edge of M&A activity, and many of the predictions are that we'll begin to see a more notable supply gap between supply and demand for copper emerging, if not late this year, by next year, which will most likely lead to a substantially higher copper price. And that will probably trigger even more activity in this space, and we'll begin to see the major companies try to put their hands on assets like these moving forward. We don't require that higher price for our project to be economically viable, but what happens is when we have higher metal prices, the larger mining companies begin to build up a lot of cash and begin to be motivated to grow rather than simply pay dividends and conserve cash when prices are low. And so that usually triggers a lot of M&A activity. I think we're entering into the perfect situation to be delivering copper projects like we have. This just addresses a little bit about the copper demand. I'd probably, most of you know this story, but you can refer to our website to go into this in more detail. Probably the most eye-catching way we can present this there are studies that have come out that show that in the next 22 years we'll need as much copper as all copper that's been consumed in history up to date, and as an industry we'll be really scrambling to deliver this, which will undoubtedly mean a shortage of copper and a higher metal price as we move forward. I mentioned that Desjardins recently established coverage on us. This is a diagram that is one way that you can evaluate a company like ourselves compared to our peers, is by the enterprise value or the market cap pound of copper that we have in the ground. We currently, the analyst points out from Desjardins that we currently are valued at way less than 1 cent per pound for the metal that we have in the ground. Historically, these projects have been sold for about 4 cents a pound when they reach PEA or pre-feasibility level. Our opportunity is to move that valuation up as we advance the project, and we'll continue to grow the project as well. So this makes a very compelling story for an investment into a company like Aldebaran right at this stage. There are other groups that have fantastic deposits, but their valuations are much closer to what the likely ultimate value of the project will be. So that limits the upside potential for investment. Still very good projects, but really more close to fully valued as you move forward. So just as a quick summary, Aldebaran has an aggressive drill program going on already. We already have a very large resource in hand, but it's about to become significantly larger. We'll have very good news flow over the next few months and years of moving forward on the project. We're in a province and a jurisdiction that's very easy to work in and becoming very hot, very attractive as an area to explore, and I believe an area for majors to acquire projects moving forward. And as I mentioned in the last slide, one of the most important takeaways from this, it's a very good time to take a look at. Even though our share price has moved rather nicely over the last 2 years, there's still a very compelling valuation story here. It's a great time to enter in as an investment into Aldebaran. So I couldn't be happier to have our hands on a great copper project right at a fantastic time to have such an opportunity. And for those of you who'd like to learn more about this, please reach out to us. You can see a number of interesting videos on our website where myself or Kevin Heather, our Chief Geologic Officer, walk you through in details of who we are and what we're doing and the excitement we have for this project moving forward. So thank you for your time. Take care. Hi, I'm John Black, the CEO of Regulus Resources, and welcome to 6 Mix. We're really happy to be presenting at this and give those of you that might be new to our name a chance to learn a little bit more about us, and those that are familiar with us just to get a quick update on what we're doing. I appreciate all the efforts of the 6 team to put this forward. Regulus Resources is a publicly traded company on the TSXV. We're also traded in Lima, so the appropriate disclaimers apply to it. Just a quick setup on this in terms of describing who we are and what our strategy. Each junior exploration company is a little bit different on what they do. And what our team is, we're a team of very experienced exploration geologists that specialize in identifying projects that have the potential to be very large copper or copper gold deposits. Capture those projects at a downturn in the market or from a group that wants to pass the project on to a technical team that can explore it. Once we've captured the project, we add value to the project by drilling the project out and advancing it through approximately a pre-feasibility stage. In that process, de-risking the project to move forward. And then in our strategy, ideally what we'd like to do is monetize the project by selling it to a major mining company at approximately pre-feasibility stage or a little bit earlier if possible. Regulus is actually the second of 3 companies that we've had in our same management team. Our first company was called Antares Minerals. We had the good fortune to discover the Hikira deposit in southern Peru, which we drilled out and sold the first quantum in 2010 for $650 million. So we have executed our strategy once. We learned a heck of a lot in the process of that. And now we're set up with an equally exciting project called the Antiquary Copper Gold Project in northern Peru in Regulus, and we think we're well on the pathway to a similar success story. As an addition to that, we have a sister company, Aldebaran, where we've put our hands on a very exciting copper project in Argentina called the Altar Copper Project that you can learn more about by visiting the Aldebaran website. Okay, just a quick snapshot on why Regulus Resources. We're delivering a copper project at exactly the right time. We have a fantastic project, and I couldn't think of a better time to have our hands on a large copper gold project like what we have. We have a proven strategy, which I just mentioned, that we intentionally set out on a strategy. We've executed it once, and we're well on our way, or well positioned to do it again with Regulus Resources. And very importantly, we have quality partners to help us go through this process. By delivering a copper project at the right time, what the key points on this are is we have a large resource already in hand that's well defined. It's part of an even larger deposit when it's combined with the neighboring mining operations that next door, that's effectively pre-stripping the deposit and setting it up for it to make a change into a much larger copper gold project that would need to include our ground as well. It has a very low strip ratio in addition to being large and quite attractive grade. And that presence in a brownfield setting can't be underestimated. That means that this project has a much shorter pathway to becoming a producing project than, say, a greenfield project, which can sometimes take 8 or 10 years to come to production. In terms of quality partners, what I'd like to point out is that Rio Tinto Newton recently made an investment into us, so we'll talk about the importance of that and that strategy moving forward. We also have a very significant shareholder in Route 1, a large hedge fund out of San Francisco that's provided excellent support for us as we advance our projects going forward. And Osisko Gold Royalties also has royalties on the project and provides us support in the project. In addition to the strategic partners that I've just mentioned, it's important to note that we consider our partners all of the stakeholders in the projects, including the communities that are surrounding the projects that will allow us to move the project forward. So let's talk about that Rio Tinto strategic investment, because this is news for many of you. It's the most recent news release we've had out on the company. In January, we closed an agreement with Rio Tinto that provided an investment from Rio Tinto of just over 20 million Canadians, $15 million US, as a placement into the company. It was a placement at an over-market price. The share price that they paid to come in was $1.02 per share, so about a 40% premium to what our trading price had been prior to this investment. That provides them with approximately a 16% shareholding in the company. And this agreement is with a division of Rio Tinto called Rio Tinto Newton. And so the agreement provides Rio Tinto a chance to more closely monitor the project moving forward, and to importantly test a series of patented technologies that they've grouped together, which explore the possibility of doing heap leaching of primary copper sulfide ores. This is something that many of the major copper mining companies have been investigating over the last few decades, is a way to process primary sulfur or primary copper mineralization that could be processed at much lower cost, with a lower use of water, lower use of energy, and no necessity for having tailings or smelting involved in the process. So from an ENS&G standpoint, if this technology works on the project, it could be a very substantial game changer for the project moving forward. It's important to note that this technology is not necessary for us to advance the project. We're testing it as one alternative on how we'd process this style of mineralization. If it works, it'll be great. I think it'll make it a much better project, but it'll be a very, very satisfactory project moving forward, whether we can use this technology or not. And we very much welcome having Rio Tinto on as a shareholder and a partner as we advance the project. So the resulting share structure after this placement is that we have Route 1 as a long-term strategic investor in the companies. They provide a lot of support for us to move forward. They have approximately 22% interest in the company. Rio Tinto Newton now has a little over 16% interest, and as management, we have a little over 10% interest total. So relatively low share count for the stage the project's at, and we currently have a market capitalization of about $100 million. So let's dive right into where the project's at. We're located in northern Peru. We're in the midst of a cluster of very large copper and gold deposits. Many of the copper deposits have significant gold associated with them as well. This means we're in an area that has abundant mining infrastructure and the presence of mining activity already, which can't be underestimated in importance when you're advancing a project. If we dive right into the project area itself, we can see our land position in the collage of red to various shades of pink in the upper portion of the diagram. We own 100% of the red claims. We've recently announced that we've completed the requirements to earn into 70% interest in the Kokirumi block, which is the medium shade of pink on this diagram. That provides us a direct interest, a 70% interest in that block and the operatorship of the joint venture that administers that over a very large area to the north of the project area. And in the light pink shade is a block of ground or blocks of ground that we have an option to earn in up to a 60% interest from Goldfields. Collectively, this establishes a large land position for us just to the north of the Tantuatai mine. The Tantuatai mine is operated by the Comalaiche joint venture, and the Comalaiche joint venture consists of 3 different companies. Southern Copper, which is Grupo Mexico's Peruvian subsidiary, top 5 copper company in the world. Buenaventura, a large Peruvian precious metal producer listed on the New York Stock Exchange, and a small position held by a local Peruvian family company called Espro. Collectively, that joint venture is mining the oxide cap for precious metals. They produce gold by heap leaching oxide material on the top of the project, and they're pre-stripping and exposing a much larger copper gold sulfide deposit that's partially on their ground and partially on our ground. And then 7 kilometers to the southeast, we have the Cerro Corona mine, which is operated by Goldfields, one of their best mines worldwide. But both Cerro Corona and Tantuatai are mines that have relatively short remaining mine lives. They've been very good mines for their respective owners, but they only have a few more years left, approximately 5 years for each mine going forward. However, in the district, there's an opportunity to transition from 2 very interesting mines that provide a lot of direct employment and economic support for the communities in the area to one much larger mine that we would, in our vision, would be a mine, what we call a multi-generational mine that will last for quite a number of years moving forward, decades actually. This is an oblique view that shows a little bit better what the situation is at the Antiquary project. We're looking to the northwest. We can see in the upper left-hand part of the diagram the Tantuatai mine, which is pre-stripping that oxide cap over the large copper gold sulfide mine. The pit outline that we see on this diagram is showing the conceptual pit that constrains the resource that we reported in 2019. And we can see a vertical line with the right-hand side in colors and the left-hand side blank. That's because we can only show the grade and the distribution of ore on our ground. So the right side of the pit in this view belongs to us. We see the distribution of mineralization in the pit. The sharp boundary, which moves to the left side, which is onto the property belonging to Comalaiche and the Tantuatai mine to our south. This is how we can show the diagram. We know what's on the other side of the diagram. We just aren't allowed to show that publicly moving forward. So let's look a little more closely at what the size of this deposit is. We've got a view on how it looks and how we can show that diagram. In the upper right-hand side of the diagram, we see a plan view that shows our claims. Once again, the dark red claims are 100% owned by Regulus. The pink claims we've just earned into 70%, and the gold-colored claims we have a pathway to go to 60%. We can see the black outline of the pit that constrains our resource. Within that pit, and only on our ground, in the red ground, is the resource we reported in 2019, which is in the lower right-hand portion of the diagram. We can see it's about 50% indicated, about 50% inferred. The total of that is a little over 500 million tons. It's slightly less than 0.5% copper and a 1/4 gram to 1/2 gram of gold and significant silver. So very good combined grades on this moving forward, approximately a 0.7 copper equivalent and a large tonnage. And that's just the portion of the deposit that's on our ground. If we look at what's most recently been reported for our neighbors, part of the portion, the overall district, they report over 900 million tons at a slightly lower grade. They use a different cutoff than we do moving forward. So you can begin to see the size of the overall project and the complexity of how our land position is interfingered with their land position going forward. When they terminate the oxide production on the joint venture or on the Tantuatai side of the property position, this will be a very well-positioned project to advance into that much larger mine. And that much larger mine will require the integration of our property with a neighboring property moving forward. This is a bit of a view that kind of gives a better perspective of that situation. In the upper left-hand side of the diagram, we see the benches of the Tantuatai mine. They're stripping that oxidized material, the cap over the high ground to the south of our area. And in the foreground is our part of the project, the Antiquary part of the project. So when that high ground is stripped off and finished for the oxide mine, it essentially sets us up for a much larger copper gold sulfide mine moving forward that would by necessity include our ground as that's being developed. This gives us a little better perspective of what this combined deposit might look like. In the bar charts on the left side, we see the Antiquary project, the part of the project that belongs to us. And we see two shades for indicated versus inferred. The green represents copper, the gold colors represent gold. And we can see the combined amount of copper in our portion of the project is over 5 billion pounds of copper and over 4.5 million ounces of gold. But when we combine that with the most recently reported resource from our neighbors, we can see the total deposit put together of what's reported right now would be over 11 billion pounds of copper, a very large copper deposit in its own right, and nearly 10 million ounces of gold, a very large gold deposit if it were only gold. You combine these and this project becomes quite interesting moving forward. So any major copper or gold company should have this project on their radar, and many of them do and are interacting with us to evaluate the project moving forward. However, the common comment that we get when you interact with large groups taking a look at this is that they find it to be an extremely attractive project, but the land complexity makes it difficult for them to envision how they might be able to participate. So the strong message we're getting is that the next stage for this project to move forward is really some type of a consolidation of the land position. That can happen in any of a number of different manners, and the type of agreement we'd be pursuing under confidentiality agreements with various partners involved. So we can't really report details of that. But what I would like to point out is there are a number of situations that make this likely to happen in the relatively short-term future on this. Primarily that the oxide mineralization at the mine next door only has 4 or 5 years of remaining mine life. And it's much easier to make a transition from an operating oxide mine into a much larger operating copper gold sulfide mine than it is to terminate the oxide mine, shut things down, incur closure costs, and then have to seek permission to reopen the mine. It's particularly important in terms of the social impact of a project. It's much better to go from a mine that employs a fairly large number of people to one that employs even more people for a longer period of time than it is to have everybody be without work and economic benefits and then try to seek permission to do it again. So the continuity is particularly important for the social benefit of the area that we work in. Just a quick few words on this project overall. This is a project that requires a bit of patience. Because of the complexity of the land situation, the complexity of the deposit itself, this is not one that we could advance quite as quickly as we did, say, with our Hakira project in our first company. And we've encountered a number of situations as we move forward on the project that many times people have felt, boy, that's going to be difficult for you to overcome. But we've systematically resolved those. When we first established our land position, the big question was, can you even explore it? We solved that by establishing agreements with the neighbors that provided collaborative exploration opportunities for us to move forward for the benefit of both sides. The project has a significant amount of arsenic, and many of our other presentations we address that. We found multiple pathways forward that we will be able to work with the arsenic in the project. Very interestingly, the Rio Tinto Newton technology is an excellent way for us to work around the arsenic content of the project. There were even questions about whether we'd be able to obtain social license to move this project forward, and we've clearly demonstrated that with the drill programs we've been completing over the last few years. We now face perhaps the final real hurdle on this project is how are you going to get the consolidation in the district accomplished to allow the setting to have the development of the large project. We're well on our pathway on that. We will be happy to report that we think at some time in the not too distant future, pathways that we can move forward for the benefit of all parties in the district. And so stay tuned on that. This does require a little bit of patience, but we've been able to work our way through all the hurdles on this project pretty systematically as we move the project along. So the next steps at Antiquary is we'll enter our phase 3 drilling program. Our phase 1 drilling program allowed us to put out the resource that I mentioned earlier today. We completed our phase 2 in December of last year. We'll be in a position to do an updated resource estimate later this year based on that phase 2 program. And our phase 3 program will consist primarily of collecting large diameter core samples for metallurgical testing, in which we'll use to evaluate the Newton technology with large column leach tests moving forward, see if that's a better pathway for us to move forward than our other alternatives. Once again, we do not need to have the Newton technology to work to have this be a very attractive project. It just has potential to make it even more attractive and with a lower carbon footprint moving forward. As I mentioned, we'll have that resource update out later this year. We'll continue to work towards earning in on the Goldfields JV, which will include additional exploration work to the east of the project. And more importantly, we'll be working collaboratively with partners in the district to seek a way that we can collectively move this project forward to the benefit of all stakeholders in the area. So please stay tuned. I think you'll see some pretty exciting news coming out of this over the course of the next 6 to 18 months as we complete those activities that I just indicated. It's really important to mention on this that a part of this activity, and we're really out at this project, we've kind of come to the point of defining the size of the deposit. Now we need to begin the part of de-risking the project, which is showing how the project can be developed to the best benefit for all stakeholders in the area. We openly have a strategy with an intention to sell our interest in the project in the future, but that doesn't mean we cut corners. We have to do everything exactly like we'll be developing the project ourselves to make it more attractive for a potential acquirer. So a lot of that involves working with communities in the area, making sure that we're collecting very high quality technical data. We're doing everything to make this the most attractive project possible for a potential acquirer. I'd like to also point out that I think we're really on the beginning leading edge of the acquisition of these type copper assets in the future. We've begun to see the major companies seek out and acquire it. And the first stages of this tend to be them buying interest in districts where they already have participation. But this will evolve as M&A picks up, as copper prices pick up due to the looming gap between supply and demand that many people have been talking about. And when that occurs and metal prices begin to increase over the course of the next year or two, I think we'll see a lot of merger and acquisition activity in this space. So just to summarize, the Antiquary project is a brownfield copper gold deposit with district scale potential. We have a large resource already in hand. We have great strategic partners to move this forward. It's really a brownfield situation, which means there's a much quicker pathway to development of this project, which makes the project more valuable and more attractive. And most importantly, for those of you as investors, there's a compelling valuation at this point in time. We only have a market cap of about $100 million on this project. Similar assets, including our Hakira deposit that we sold to First Quantum, have been sold for significantly higher amounts than that, and we have no reason to believe that this one won't be. So it's a great time to take a look at this as an investment, and with a little patience, I think you'll be very, very much rewarded in the not too distant future. So thanks for your time on this, and if you have any questions, please contact us via our website or the details at the bottom of this presentation. Thank you very much.
Hello, I'm Dennis Quaid. Today's investors are more concerned than ever about saving and planning for the future. As we're about to see, there are smart ways to make the money you earn today help prepare you for tomorrow.
Gold mining has brought great success and resources to countries all over the world for centuries, and continues to be an extremely rich and viable economic investment.
Gold mining's been around for thousands of years. It's the original money. It's tried, it's tested, it's true, and it's undeniable. In periods of uncertainty, people flock to gold as a store of value. In the communities in which it's mined, it brings a lot of economic prosperity, allows people to upgrade their skill sets, brings GDP growth to areas that might not have that same opportunity otherwise.
Mining is the biggest employer in country, so it's created a significant amount of jobs in country, tax source for the government as well, and more importantly, I think education as well. It's created a lot of skilled labor force that's impacting generations to come. So it's certainly very meaningful and a big driver of the economy.
While it is relatively unknown to most people, Mongolia is a resource-rich country at a turning point in its history. Within the last few years, it has become the last frontier for large-scale gold mining projects, quickly improving economy and job opportunities.
Democratic Mongolia is only 30 years old. In the past 3 decades, our economy has quadrupled. Our current government, the Prime Minister and the President has been very supportive of foreign investments and developing of responsible mining industry. Our mining industry makes 1/4 of our economy, over 70% of foreign direct investment, and over 90% of our exports. Mongolia has full resources of coal, copper, gold, and iron ore, and many other minerals. 70% of our territories remain undiscovered to geological surveys, and mining license has been issued to only 1% of the territories.
Mining in years gone by had developed a reputation for exploiting local resources and not giving enough back to its host governments. We're no longer in that world. You can't be a proper listed mining company with all the disclosure and the obligations and not be a great partner, not take care of your host governments, your workforce, and give back to the communities. If you want to generate a return through gold mining and mining in general, you need a great mineral endowment and an environment which is supportive of unlocking that mineral wealth. And that's what we see in Mongolia. We're only seeing the start of the mineral potential in the country, and I think the government sees that potential, the host communities, and together we can unlock a lot of value for investors as well as for the country.
Gold is a historically safe investment for economic growth, and the industry boom in Mongolia is the proof.
We're glad you could join us today. I'm Dennis Quaid. See you next time.
Hello, everyone. My name is Anil Varach, Executive Vice President and Director of Steppe Gold Limited. Steppe Gold is currently a gold and silver producer, focused on Mongolia as a producer, expanding into our phase 2 operation over the next 2 years, while continuing to explore Mongolia, and just recently announced an acquisition to double our resource base outside of Mongolia, which I'll get into. So usual disclaimers as for any presentation, forward-looking statements. So today, Steppe Gold, listed on the main board of the Toronto Stock Exchange. We have just over 72 million shares outstanding on a basic share count as a producer. On a fully diluted basis, we're currently would be 86 million shares outstanding and about 22 million of cash that would come in. So our market cap today is just over 75 Canadian as a producer. We listed the company in May 2018 at $2 a share when gold was circa $12.50, and we hadn't built a mine. So we had a greenfield operation, a site in Mongolia. We had build risk, capex risk, finance risk, and permit risk. 2 years later, in April 2020, we brought production online for the first time ever, very successfully, producing about 35,000 ounces in the 9 months during startup and ramp up. Most importantly, during COVID. So you couldn't get into Mongolia if you tried. So with a 100% local team, we were able to bring production online and generate a significant amount of cash flow. In fact, our all-in costs were just over $800 during that startup and ramp-up period in 2020. So we've had a very successful start. We are in production today, and we'll be in production from our heap leach operation for the next 2 years while expanding into our sulfides, which today have a 12-year mine life at an average of 103,000 ounces per annum, with industry-leading costs of about $850 all-in cost. So a very robust expansion project in about 2 years' time will come online, generating probably cash flow that's as much for our market cap today. We have very strong shareholders, backers that have backed us since inception and privately as a company in 2017 when we acquired our first couple assets. Board and management, importantly, own close to 20% of the company today. We've been public for just under 5 years and have never sold a share. So I think that's very important for any industry you work in, any management team in any industry, to have that alignment with their investors and partners. And that's what we offer. We feel the pain when the market's soft, and we're certainly here to ride the gain together. Fidelity Investments owns 6% of our company today. Eric Sprott owns 11% of our company. These are investors that are long-term investors, have cost bases that are much higher than today, And in fact, we haven't raised equity for over 2.5 years. Our last equity raise was done at a price of 2.15 with just Eric Sprott, who's actually bought more shares on market. We're backed by Elliott Management and Triple Flag through equity and stream. They put in $7 million equity between the IPO and pre-IPO at $2 a share, and backed us through a stream transaction for $28 million US. Current coverage in the stock is from Hannam Partners, Stifel GMP, and Haywood Securities. We believe our research coverage will grow in the next few quarters as we continue to grow. So very quickly, 2018, we listed the company. 2020 brought production online. 2021, we put out a feasibility study for the expansion and showed that we've grown our resource base from the initial 1.2 million ounces when we started the company on a resource, with inclusive of 210,000 ounces of reserves. Today, we're over 2 million ounces of resources with 1.7 million ounces of reserves on a gold equivalent basis. These deposits still remain open and have only been drilled down to 350 to 400 meters. So we have a project today that can go into production on our expansion in about 2 years, with 12 years of mine life, over 100,000 ounces, that we believe will continue to grow. And so we're fairly comfortable, I think, that in about 2 years' time, when that production comes online for phase 2, it'll look more like a 15 to 20-year mine life at over 100,000 ounces per annum. So scale is there, very robust cash flows. And in all of that, just recently, March of this year, during PDAC, we announced an acquisition, which I'll highlight at the last slide. So our board and management team, half our board are Mongolian. So we're very local, as I mentioned in the beginning. That's how we're able to operate during COVID. That's how you should run any company in any jurisdiction. The more local you are, the more support you get locally, provincially, and federally. And we've seen just that. In fact, the Bank of Mongolia has given us capital to grow, not ask for more from us. We own 100% of our asset today. So Bata Tumor Osher, our CEO, and Matt Wood, our executive chairman, have actually worked in Mongolia since 2009. They've previously built another company called Hunu Coal, and that was sold in 2011 for $500 million cash. So there's a track record of execution in country. I think it's very important, and we've demonstrated that by bringing up a mine online, one of the very few around the world, actually. So Mongolia today, very quickly, one of the most resource-rich countries, relatively underexplored, but still home to world-class assets and discoveries. The Oyu Tolgoi mine, now fully controlled by Rio Tinto, is one of the biggest copper mines in the world, one of the biggest discoveries made by Robert Friedland back in the early 2000s. So it certainly demonstrates that you can build world-class mines and operate in country. You have a super major like Rio Tinto that's doubled down in country, a very strong endorsement. And Steppe Gold is looking to build the premier precious metals company. No pun intended, step by step. We built our starter project, a heap leach operation, shallow open pits down to about 40 meters, and we'll transition now into all those pits into a larger pit down to about 350 meters, which will be an open pit operation for the next 10, 12 years before we decline underground into the higher grade chutes. Just highlighting, you probably saw the video before my presentation, our current operation. As I mentioned, we have a 1.7 million ounces of reserves on a gold equivalent basis. What's key to note on this reserve estimate that came out in our life of mine update just 2 weeks ago is the base metal component. So we put out a feasibility study that will process lead and zinc. So 2 of our 4 deposits have precious metals and base metals. The other 2 are just precious metals, higher grade precious metals. So we put out a feasibility study that will process all of these metals by setting up a flotation circuit. So you'll be producing lead and zinc concentrates that have high precious metals cons. And so what I wanted to note here is the lead and zinc grades that we used in the feasibility study already of 0.4 and about 0.7%. Since that's come out, we've actually drilled underneath ATO1 and ATO2 deposits, and we've seen grades that are 10 to 20 times higher than in our feasibility study. So that just shows you the high grade component, but also shows you the life of mine extension that I mentioned beyond the 12 years for phase 2. So today we have about 14 years of production ahead of us. 2 years, the next 2 years from the oxide mine, we'll use some of that cash flow alongside debt to finish our expansion, which some of the high level numbers are here. 130 million US of capex, 250 million US of MPV, 2.2 billion US of revenue, and you can see the grades that are much materially higher since we've put this out. So we're quite excited to bring that online. Since we announced the feasibility study in 2021, we've actually put out a power agreement we've reached for grid power. So there will be a power upgrade for phase 2. That will lower our OPEX by about 10 million US a year, or over $100 an ounce. Net, given the world we live in, that will still probably end up about 850 US an ounce for our phase 2 operation. Over 100,000 ounces per annum, that's, roughly the math here is, over 80 million US of EBITDA. Very strong numbers here for a less than 100 million Canadian market cap company. So we are growing very quickly. We've executed. In fact, we've already started construction on our phase 2 operation. This is the fixed crushing circuit you can see here in the middle of the slide. We installed that over the last 18 months. It's fully installed, ready to go. We'll actually start using it later this year in the spring and summer to process more oxide material before we get to the hard rock. And it'll give us an advantage to start stockpiling and getting a handle on the hard rock crushing for phase 2. Last but not least, in Mongolia, we have a second project. It's called the Udam Hundi project, and it's a 14,400 hectare exploration license. We also acquired in 2017. And the excitement here is it's an exploration license, very large package that's in a very new gold district, very exciting gold district where our peers, Energy Resources in the blue around us, actually joining our license, have had tremendous success in the last few years. They've made some tremendous success, high-grade discoveries. They have over 1 million ounces. We've done very minimal work, but we have done IP, magnetics, soil sampling, trenching. Trenching results from surface, 450 grams silver, 1.5 grams gold, 4% copper, 3% copper, 4% lead. So very encouraging initial results that we will focus on. We do see this property as another production center for us in the future, and maybe an opportunity for consolidation once we get phase 2 up and running and have time and the resources to focus on this project. But very exciting exploration license in Mongolia, where we are, the home of elephant discoveries on the base metals, and we believe there's many more discoveries to be made in the precious metal side. So I mentioned at the beginning of the presentation, we've actually announced an acquisition, 2.5 million ounces of resources we're going to be adding to our book when this transaction closes in Q2 of this year. We acquired this company for shares, so about 21 to 22 million of shares. It's a very exciting, one of the highest grade undeveloped oxide mines in the world in Peru. So this is a grade of 1.28. There's actually close to 600,000 ounces of leachable oxides and sulfides. So actually the phase 1 operation in Peru will be 3 times the size of our phase 1 operation in Mongolia. So a very solid project that we're very excited about. It adds a material amount of ounces to our resource book, a very strong development pipeline. So once phase 2 is up and running in Mongolia, we'll probably have advanced phase 1 in Peru here, oxide, very similar project to Mongolia, to a feasibility study and fully permitted. So we can then take some of our team with a local team in Peru and start building this oxide mine that currently has an NPV at $1,700 gold of 170 million US. We acquired this for 22 million Canadian. So it's fantastic, creative acquisition that allows diversification and scale that investors like to see in this market. We're very excited, and it fits very well into our development pipeline, where we're not focusing too much resources and time and money on this project while advancing our expansion. Once expansion's up and running, we'll have tons of cash flow to focus on here and to build our next mine. And within 2026, I think we should be a circa 200,000 ounce producer between Peru and Mongolia. So a very exciting story. With that, I'll sum up, and I really thank everyone for their participation in this conference. And please reach out anytime if you have any questions on Steppe Gold. Thank you very much.
Hi, my name is Mike DeRose. I'm the president and CEO of Lavras Gold Corporation. I've been asked to give a teach-in on the concept of grade in the mining industry. Just by way of background, I am a geologist, and I actually did a master's degree in mineral economics. And my master's thesis was actually in exploration economics. So I was looking at the cost, risk, and returns of mineral supply, essentially. And as part of that, I needed to sort of have a good understanding as to what is grade and what does that mean in terms of economics in the mineral industry. And so I'll try to incorporate some of that thinking into my teach-in here. But essentially what grade refers to is the amount of metal in a mass of rock. It can also be called the tenor of a rock. In terms of precious metals such as gold or silver or platinum, we typically refer to grade in terms of grams per ton or ounces per ton. This is because the value of these precious metals is actually quite high, and therefore the quantities of precious metals that we need in the rock is actually quite low. So that's why we can refer to sort of grams per ton of rock. In terms of base metals, we typically, and industrial metals such as copper, zinc, nickel, iron ore, that sort of thing, we typically refer to grade in terms of percentage. So you can have like 1% copper, for example, in a copper project. And the reason that we refer to percentages in base metals and industrial minerals such as iron is because the value of those metals tends to be very low. So for example, the zinc price is about $1.30 a pound right now. Nickel is about $10 a pound. Copper is $4 a pound, and lead is about $1 a pound. So for example, when we refer to a rock such as a rock that has, say, 1% copper, that means that 1 ton of rock contains 1% copper. So we know that 1 ton of rock is actually about 2,204 pounds. So that means 1%, if the rock has 1% copper, we just divide that, 2,204 pounds by 100. That means 1% copper is actually about 22 pounds of copper. So 1 ton of rock contains 22 pounds of copper if it has a grade of 1%. And to give you a sense as to how much is 22 pounds of copper, a typical car that we would drive in uses something like 20 to 50 pounds of copper. Electric vehicle uses something like 180 pounds of copper. So that just gives you some sort of a visualization of what 1% copper is and what it would be used for. In the case of gold, we often refer to grade in terms of grams per ton. Now, there are 31.104 grams in 1 ounce. So that means when we refer to 1 gram per ton, we're actually referring to about 0.0321 ounces. So if 1 gram per ton has 0.0321 ounces in a ton of rock, that means that it's very small. In terms of physical size, it's probably about the size of the tip of a pen. So what does that mean in terms of metal value? So this is the link. So it's great. We got 1% copper. It's 22 pounds. Great. What does that mean in terms of the value of the rock? Well, basically it means if copper is $4 a pound, we can multiply the 22 pounds of copper in 1% copper ore and get $88 a ton. So basically the gross metal value of 1% copper is about $88 a ton. In the case of gold, if we have 1 gram per ton of gold in that mass of rock, we said that's 0.0321 ounces. We know the price of gold currently is about $1,950 an ounce. So we just multiply that by the 0.0321 ounces per ton, and we basically come up with a value of about $63 a ton. So in other words, 1 gram material, 1 gram of gold in a ton of rock is worth about $63 a ton. So let's just summarize where we're at, because I've thrown a lot of numbers and details at you. Grade or tenor refers to the amount of metal in a mass of rock. We can calculate the quantity of the metal in the mass of rock by knowing its grade. That's essentially what we're trying to do. We can then calculate the value of the rock by knowing what the commodity price is, and then just multiplying by the amount of metal in that ton of rock. Then we get into these kind of concepts of high grade and low grade. And the general sort of feeling is that if you have high grade rock or high grade tenor, it means you have more metals per ton of rock, which means it's more valuable notionally. And if you have lower grade material, it means you have less metals per ton of rock and means it's less valuable. But the question is that the whole story? And the answer is no, it's not. In fact, David Lowell, who was a very famous American geologist who I had the privilege of meeting in my career, early in my career, he passed away a few years ago, but he's regarded in many circles as an individual who's probably found more copper and more economic mineral deposits than anybody on the planet. And he wrote an autobiography in 2014, which I read, and there's a really good quote in there. And I'll just read it to you because I think it really hits home. And he said, sometimes low-grade rock is economic, and sometimes high-grade rock is sub-economic. So just think about that for a minute. Low-grade rock can be economic, and high-grade rock can be uneconomic. What does that mean? Basically, it means there's a lot of other factors that go into determining whether or not a mass of rock and a grade of rock will actually, become an economically viable mine. So what other factors do we need to consider? Well, a couple of them are, number one, metallurgical recovery. It's very common, for example, in the gold industry to have what we call refractory ores. What does that mean? It basically means you can have, say, 10 grams per ton gold, but if the ore is refractory and you can only recover 10% of that ore, because the gold is locked up in the crystal lattice structure of a particular mineral, for example, that means that instead of really having 10 grams per ton, which is notionally high grade ore, you might only be able to recover 1 gram if you have, say, 10% recoveries. On the other hand, you can have 1 gram per ton material, which is oxidized, sitting right at surface, and you might get 90% recoveries. So, and you have to be very careful when you just see the headline of a press release which says, I got high grade, and away you go. It doesn't necessarily mean it's economic. It means you have to have it in, you have to think of things in the context of what does it mean with respect to that specific mining project. The other thing that people need to understand is the cost structure of the industry. So when we talk about grade and we talk about rock value, gross metal value, if you like, that's really the revenue side of the equation in the industry. But we also have to extract that ore and process that ore and get it to market. So that's sort of the cost side of the equation. And really in the mining industry, the fundamental two things you need to know about are, is this material that's been drilled by this company sitting near surface, or is it really, really deep? If it's near surface material, that's typically a good thing, because the cost structure of extracting ore near surface in an open pit is significantly less than having to, go deep, say 2 or 3 kilometers depth to extract ore. So to give you a sense of what that means, in the case of an open pit mine, it might cost you something like $2 a ton to move a ton of material. Whereas for an underground mine, it might cost you $150 a ton. So that has significant implications in terms of what we call cutoff grade. Cutoff grade is the minimum grade you need to break even on an operating cost. So for example, in an open pit mine, it might cost you $2 a ton to move material. You might have a waste to ore ratio of 3:1. So in other words, you have to remove 3 tons of waste for every 1 ton of ore that you mine. So that would be a total of 4 tons of material times $2 a ton. So let's say it costs you $8 a ton to mine. And then you would have your processing costs, which might be $10 a ton, and then your G&A costs, which might be $2 a ton. So all in, it might cost you something like, $12 or $15 a ton. So essentially what you would need to do in terms of your cutoff grade is make sure that the cutoff grade is equal to whatever your total operating costs are. The last thing I wanted to talk about with respect to grade in a mineral deposit is the concept of geological grade variability. And what do I mean by that? Basically, when we refer to mining projects, and we refer specifically to their mineral resources, we refer to a tonnage and a grade estimate. And so, for example, we might, in a gold project, we might have 31 million tons at 1 gram per ton gold, which is basically equal to about 1 million ounces. But what you need to understand, or what investors need to understand, is that that's an average grade of the entire deposit. And in certain portions of the deposit, you can have higher grades, and in other areas, you can have lower than average. So, for example, you can have an area that's, say, 1.5 or say 2 grams per ton gold, and then another part of the deposit can be sort of like a 0.5 gram per ton, something like that. Typically, what mining engineers try to do when they design mining projects and try to optimize the economics of the project is you try to mine the higher grade material first, because it's more valuable and you can get higher cash flows early on in the project. And in this way, you get what we call capital payback really quickly. Then afterwards, you start to mine the lower grade portions of the deposit once the capital is paid for. And so it's very typical to see this kind of grade distribution being put through a mining project: high grade at the front end, lower grade at the back end. And so I refer to this as sort of the high grade. It's the higher grade that basically determines the economics or carries the economics. It's the low grade that can give you the volume. It's very, very common. Certainly in our project at Lavras Gold in southern Brazil, we're seeing that. We're seeing, multiple deposits. Some are higher grade, some are lower grade, some are in between. And ultimately, the way I sort of think about our project is that it's going to be the high grade material that carries the economics. It's the lower grade material that's going to give us the volume. So just to sum up then, just in terms of grade, I've thrown a lot of information here, but I'll just leave you with a few points. Grade really refers to the quality of the mineral deposit. Generally speaking, higher grade equals more metals equals higher value. Lower grade equals less metal equals lower value. In order to determine the value of that ton of rock, or that ore as we refer to it, you multiply the metal price by the content of that metal in that ton of material. That gives you your gross metal value. But just keep in mind that you need to understand the context of the project itself. Sometimes low-grade rock can be economic, and sometimes high-grade rock can be uneconomic. So you need to understand the reasons as to what may be driving the economics of a specific project. And mining projects typically mine high-grade material first and lower-grade material later. And that's really to optimize the economics of a project. And again, it's the high grade that carries the economics. It's the low grade that carries the volume. Thanks very much. And if you have any questions on this, feel free to give us a call. Thank you.
Hello, everybody, and welcome to the corporate presentation for Sarama Resources. Without getting into the presentation now, just quickly, the forward-looking statement. Obviously, I won't read through that, but that's available on our website if you'd like to look at that and read it at your leisure. But getting into the company, Sarama is a dual ASX and TSXV listed company. Our primary listings on the TSXV and a secondary listing on the ASX. We've been listed on the TSXV for quite a while, and we recently listed on the ASX in May last year, where we did an $8 million capital raising and started to put that to good use drilling in Burkina Faso, where we operate. So in Burkina Faso, we operate in the southwest of the country. So I think from our point of view, geopolitically, it's a preferential part of the country. But I think importantly, our decision to be where we are is really opportunity driven, and we operate in the Hyundai Gold Belt, which is a very well endowed belt in the country. We've got a large 100% owned land position there. It's called our Stanatura project. We've also got a joint venture in the same belt with Endeavour Mining on the Karankasso project. So really, though, the value of the company is underpinned by the Stanatura project. We've got a close to a 3 million ounce resource there when you combine all the different elements of the resource. And importantly, a third of that is oxide and 2/3 is over 2 grams. The Senatura project also hosts a major part of a large gold camp-sized mineralising system, which I'll touch on shortly. And as mentioned, we did the ASX listing last year, which then recapitalised the company and let us start drilling. So we drilled 20,000 metres last year in the second half. It basically targeted shallow, high-value mineralisation and predominantly in oxides. We have recently released all of the results from that. And I guess the results were very good, drilling intersected multiple areas of near-surface high-grade oxide mineralisation, proximal to, so very high value, but outside the current mineral resource, so not infill drilling. So all of that drilling that we've done is highly accretive. But I think importantly, we still have significant near-field and regional exploration potential remaining in the project. So we think there's quite a bit of exploration runway left there. But also importantly for us, the resources through a critical size that will support a mine development. So we're currently undertaking a PEA to look at evaluating, I guess, an accelerated multi-stage development for the project and exploit the large oxide resource that we've got, the favourable leach kinetics and the grade profile of our oxides. So quickly on the corporate side, we've got a very experienced board and management team. The chairman's Simon Jackson, so people in North America may be familiar with Simon from Redback, where he was heavily involved in a deal with Kinross there. Redback was bought for $8 billion at the top of last cycle. So he's a corporate and capital markets guy. My background's mining operations before going into this side of things. And the other two directors are a geologist and a feasibility and projects guy who used to be on the board of Lycopodium. So I think anyone who's seen Patrick Downey speak will speak quite a bit about Lycopodium because they've just built their project. So Steve's a pretty experienced guy. And the management team, we've all operated in Africa for quite a few years. We're also pretty heavily experienced on the mining side of things. So, we're pretty comfortable working, with what we've got and with what we do. The capital structure is still fairly clean and tidy, and we've got a fairly good shareholder register. Looking at Burkina Faso itself, obviously it gets some good headlines and some bad headlines, but really the geological opportunity here is quite significant. There's 9 gold mines in operation. Projects are still getting financed and built there on time and on budget, and most recent being Orzone's Bombore project. And there's 2 gold mines now that are in expansion and development. So Orzone's looking at a significant expansion at Bombore, and West African Resources, which is an Australian gold producer, who I think is the lowest cost gold producer on the ASX, is just looking at developing their Kiaka mine, which will take them to a 400,000 ounce a year gold producer in Burkina Faso. So as a mining jurisdiction goes, it's got a modern mining code. The belt that Sarama operates in the southwest, it's a very well endowed gold belt, and I guess from a geopolitical point of view, it's a preferential part of the country. Looking at the Senatura project itself, it has a solid resource foundation that's really well positioned to support a multi-stage mine development. And I guess the work we're doing now is really trying to, work out the best way to take the project forward. We still see a lot of exploration potential here. It is a large gold camp, and if you include Endeavour's Bantu deposit immediately to the west, Vatankoro deposit, just in that particular area there, you would have 3.7 million ounces within a 6-kilometre radius. So it is a very well endowed part of the area. Our resource inventory for the project, which is the area shown in red there, is just shy of 3 million ounces. But importantly, there is a significant high-grade component to that resource. And using a 1 gram cutoff, there's 0.5 million ounces at 2.5 grams in indicated, plus another 1.8 million ounces at 1.9 grams in inferred. As mentioned earlier, the oxide hosted gold accounts for about 1/3 of the resource. And we are undertaking study work now to evaluate, we're deeming it a CapEx-like multi-stage development. So something that we think is inherently financeable, that's been optimised on an EV per share basis, not necessarily on a project NAV basis, and looking at the best way to take the project forward. So the main focus on this project is to complete the PEA. We have done internal concept work looking at a large project development and the capital involved with that. and then I guess a medium-sized stage development that's got a lower capital number to get the project rolling. So as we work our way through that and we get more details, we'll obviously put that into the market. We had said we'd get a PEA done by the end of the year, but I think the schedule for that's been brought forward quite a bit. But on the exploration side, really the focus has been looking at significantly increasing the in-pit oxide resource. And looking ahead, really the focus for the exploration is to continue to grow the pit-constrained oxide resource, but also follow up on some of the very, very good hits we had last exploration season. So looking a little more closely at the Tankora deposit, which you can see is in the southwest of the project. As mentioned before, it's a very big system. The Tankora mineralised corridor is about 16 kilometres long on our property and extends for another 5+ kilometres onto the Endeavour ground to the west. It's about 1 to 1.5 kilometres wide. And we still see a lot of potential in this corridor. There's 80% of the resource in this area, which is about 2.5 million ounces, sits within the MM and MC prospects, which you can see in the central area of the Tankora deposit. But a bulk of the strike's only been tested to 70 metres depth. And there's ample space for new discoveries in between, known mineralised areas. And the recent drilling, if you go to our website and look at the last 7 news releases, you'll see that they're pretty much all new discoveries outside the existing modelled resource. So, really the ounces at the moment concentrated in the central area, but we're looking at growing that within the corridor. So really the exploration upside here is extensions to the current resource. That's obviously high value, high probability material. It's high focus, it's oxide focused programs, so obviously stuff that makes it into the schedule early on. Plus there's additional targets outside the current resource. Just looking in the central area of the Tankora deposit, I think it's important to understand that there is a high concentration of ounces in this area. So the MM area of the project, the MM prospect, we deem it, there's 1.4 million ounces pit shell constrained resource there, plus another 500,000 ounces at the MC. So, there's quite a few ounces concentrated in one area. And recent drilling we've done in the MM, we've drilled new areas outside the modelled resource, and the best hit there was 21 metres at 7.5 grams from surface. So there is a high grade component to this, and obviously it's all starts at surface, and there's a lot of new shallow material that will add to the current oxide resource. If you look at the historical intercepts, and I won't read through them all, but there is a high grade component, and you can see in the pit shell designs there where they bell out is obviously where the high grade shoots are, and they have been tested to 500 or 600 metres in the MM. So there is an underground element to this, but really our focus is on the shallow oxide material that really makes it into the early mining schedules. So really looking at last year's drill programs, the main takeaways from that, that was the first large program we've done in a number of years because we had a lot of permit delays and a restrictive joint venture. But when the shackles came off with the ASX listing and we did the drilling, we had a number of walk-up targets we needed to put holes in. So what we see, and I guess really like from the drilling that we did last year, is that we have proven that there is a lot of space and scope to make new discoveries between and adjacent to historical drilling. The new mineralisation that we've discovered has a variety of orientations and it sits outside the resource. Importantly, particularly from a mining point of view, it's pushed the depth of oxidation to 80 metres in a number of areas. And the areas we have been targeting have delivered results that we were looking for as far as extending what we've got. Also, which if you kind of look at probably our first news release, I think put out in August, we have a new geological targeting model as well that's very different to what we've seen in the belt historically, and it's basically flat, high grade areas, very high tenor that we'll be following up next season. And as mentioned before, it is part of a big system, and all the characteristics that we see from our drilling, they're all representative of what you see in other big deposits around the world. And if you look elsewhere in the Hyundai belt, you have Endeavour's Hyundai mine, which did 300,000 ounces last year. And I think an all-in sustaining cost of $800 to $900 an ounce. That's 80 kilometres away, and this has a lot of similar characteristics to that deposit as it does to Mana as well. The other deposit area is in the north of the project. This is called the Bondi deposit. We acquired this from Orezone, which was very much an unloved asset and hadn't had a lot of work for quite a while. We've remodeled this deposit. The resource on it's around 500,000 ounces. It's about 6 kilometres in strike and up to 30 metres in width. But the thing that really attracts us is the high grades and the thick intersects that we see from Orezone's drilling. It's all free milling, up to 97% recovery and fresh material. It's close enough to truck to our Tankora deposit to the south. And if you look at some of the historical drill hits there, where you have 52 at 5 from 38 metres, 13 at 20 from 8, 66 at 3.8 from 6, 70 at 3 from surface. So it's a very attractive, high-value deposit, and we haven't really had a decent shot to drill this, and this is our next lot of drilling that we'll be doing, which we should get going on in the next, hopefully, 6 weeks. Looking at what we remodeled with the Bondi deposit, what we do see is obviously a lot of very good intersections from surface, and you can see that in the block model here. So this is about 3 kilometres of strike on the model. You can see the top 70 to 100 metres is well drilled by the black drill hole traces there. But what we have noticed from the modelling is that the deeper drilling, it's sparse and it's not very well targeted. It certainly doesn't target the higher grade shoots effectively. So the system is open at depth and along strike, and there's a mix of open pit and underground targets. And I think if you look at that image, particularly on the left-hand side of the screen, you'll see an area there, where the block model's, 2.5 to 5 grams, and there's literally no drilling underneath that area. So we're pretty keen to get some holes in here, and we should have some in there before the middle of the year. As mentioned, we still see a lot of regional opportunity here. So our main focus has been on high value, high return material that's proximal to existing mineralisation, because that's going to come straight into any mining plan. But when you look at the wider project area, you can see on that map there, the pink and purple patches, that's basically gold in soils. The reason of putting that on is just really to show the size of the system, and you can see the scale down the bottom there with the 20 kilometre bar. So there's a lot of gold in the area. There's a lot of different styles of mineralisation. The exploration we've been doing is really focused on increasing the oxide and free milling mineral resources here. But if you look at the regional target, Zanawa is probably our best regional target. We've done some scout drilling on there, the best result being 22 metres at 3.85, and that was from 5 metres of depth. So that's a very exciting target. Likewise is Bamako, which is a stacked high-grade gold quartz vein system. A little more challenging from a continuity point of view, but when we do hit there, once again, it's very good grades. 15 at 6, 8 at 18 are very good. And then we have an area called the Eastern Corridor, which is about 25 kilometres of strike of quartz veining. This is very much work in progress, and is more likely to be subject to more serious exploration once we're in production. And I guess the other thing here that I think often gets missed on the market is that we do have Endeavour immediately to the west of us, and really the ultimate value play in this area is putting the Karankasso, JV, Bantu and Sanatura all together as one project. If you did that now, you'd have circa a 5 million ounce project with scope over time. It wouldn't be difficult to see that that doubling. So that's probably the ultimate value play. Obviously Endeavour's still got a long way to go to get to their size threshold. But really how this plays out in the future, we're unsure. We'd obviously like to buy Bantu. But fortunately for us, we do have a standalone project now that we're looking at how best to take that forward in the context of the market that we've seen in the last couple of years and the market going ahead. So with that, I guess looking at future milestones, we obviously commenced drilling last year. We got 20,000 metres completed. We've reviewed, I guess, the drilling that we've done, and we're very happy with the results, but I guess we're looking at the equity markets and the cost of capital. And we've decided to bring the PEA forward that had proposed to do later on in the year, do a more abridged drill program and start to frame up what the project might look like as a scaled development. So as mentioned, there'll be more of that to come. So we should have that out sometime in the second half. And when that work's completed, they'll lay out the plan on how best to take things forward. So there's a lot of work to be done. There's a lot of news flow potential coming, but I think importantly, we'll start to frame up really what the development opportunity looks like. And even if we do accelerate the development, it doesn't take away the exploration opportunity, which will basically shift and fund that out of operating cash flow as opposed to the equity market. So, we see this as as an advanced exploration play with a number of ways that we can tackle it due to the large amount of oxide, the grade profile that we see within the oxides. And I guess the opportunity we've got to tackle this from either a larger or a smaller approach. So I guess to sum up, really there's multiple drivers, as to why you should invest in Sarama. We've got a highly strategic position in 2 gold belts, but particularly in the Hyundai Gold Belt. We've got Endeavour as their neighbour to the west and to the north, for that matter, and really that area should be combined. Fortunately for us, though, we do have enough ounces now that we can move into a multi-phase development, which we're looking at a lot more closely at the moment, and basically establish the project on an oxide feed for the first 5 to 7 years at least. We do have a 3 million ounce resource already and a growing endowment, and a very compelling valuation on all comparable metrics. We view this as one of the better undeveloped projects in West Africa. And I think on a valuation basis, we're probably one of the lowest on an EV per ounce. We're actively drilling. We're moving the project forward, so it's not static. And we do have a plan, and that'll get fleshed out a lot more through the course of this year as we hit the various milestones and lay out the best way forward. So with that, I'd like to just wrap up and say thank you for listening. We do see Sarama as a great opportunity for investment. We think in the jurisdiction where we work, I guess the risk is more than priced into the company. You're still seeing projects get built in country. We think with the way we're approaching our project that it gives it the best shot of coming to production and delivering a low capital, low operating cost mine development. So I think with that, I'll wrap it up there, and thank you for your time.